Hello everyone, it's Sunday, September 3rd, and that's your week ahead video update. It's going to be mostly analyzed the markets from Elliott Wave perspective because Blake is away. I think he's out of town with his son on some soccer match. So I will take the updates for you this week and hope that you will enjoy this video. So firstly, I want to start with the US dollar. As you know, we got an important non-farm payrolls report on Friday. The data was quite strong, but revisions of the past months is really what moved the US dollar firstly to the upside. But then this dollar turned around. It made a very impressive close on Friday and finished the session much higher after the strong manufacturing PMI data. So also we had some Fed's comments, I believe. They said that 3.8% rate is still low, so this also probably was supportive for the US dollar. So looking at the charts here, maybe firstly the higher degree chart, well, we are seeing the 5 waves down completed and now we are in a corrective mode. I'm actually tracking 2 wave counts, but both suggest that we are going to hit resistance, and what I'm looking at is 105 to 106. That's still the resistance area from where I would be looking for a major reversal to the downside. So of course this is linked to the US yields. If really Fed will be done with hikes maybe later this year, maybe in 2024, we will see. I think that that's when the dollar will also turn to the downside. So we either are going to see here a 3-wave rally. Okay, it's zigzag into this resistance area, or maybe this is a flat correction and the market actually bottomed here at the start of this year. And you can see this square actually for the whole year we are just chopping around. So now we are approaching the upper side of this 2023 range. So even with this interpretation, I think that we are moving into the very strong resistance here around 105, 106, and this could then be also seen as a flat correction. So I would be expecting a reversal to the downside later this year, or maybe at the start of 2024. So I think that that's still only temporary recovery for the US dollar, and that we will see the change in cycles in upcoming months. Now looking for the euro dollar. Now euro is coming under pressure here. But we are most likely just same as dollar index stepping into the corrective phases. So I think that we are in a higher degree ABC pullback here. The levels that I would watch for is 106.30 down to 105. So that's the area where I think that euro could drop, but then eventually we could stabilize down here in upcoming months. So for now, I definitely think that euro could stay weak. Looking at the 4-hour time frame, I think that that was the leading diagonal with a throw over here in wave 5 to complete wave A. So that was the first leg of a 3-wave correction. Why 3-wave correction? Because even if just market will just slow down for a temporary period of time, you should expect that this structure of this pose should be made by 3 waves, A, B and C. And what I see now is a very nice sell-off. So I'm just not really sure if wave B has already finished here or will be a little bit more complex. So if we cannot see continuation to the downside on Monday, especially on Tuesday, because there is a holiday on Monday in the US and Canada, so obviously market could slow down a bit. So I would expecting that we will see a continuation to the downside at least on Tuesday. If not, then this still can be some kind of a flat irregular correction. So any kind of a bounce here back towards 109.30 is still going to be a very interesting resistance area, maybe for some traders to look on the short side. Okay, so definitely that's the intraday downtrend that in my opinion is still incomplete. So watch out for more levels here after any rally. As I said, 106, 105 is going to be the big downside target. Also looking at cable, firstly daily chart, that was a very nice reversal to the downside after this wedge formation here at the start of the summer. You can see that here we completed this 5-wave rise with a throw over, so it was a very strong explosive move to the upside, but then when you have this strong move at the end of the trends being reversed just a few days later, normally that's a top formation, okay, because bulls cannot handle the trend anymore. So the bears actually took out this trendline support. This was the key breakdown for me to say that 5-wave movement has completed. So I'm thinking about more weakness here. Notice very big levels here around 123 up to 124.5. So that's going to be a decision maker, okay? Either we are going to see a bounce and I will start looking back towards the highs, or if we see a break of that level 123.20 or so, then I assume that correction will be much deeper, okay? But for now, since we are having some room left to the first resistance, I think that we should stick with the intraday weakness. So here we have a pretty nice straightforward outlook. It was a very nice 5-wave drop here for a wave A with an expanding diagonal, and now we're just moving sideways, okay? After finding this low here a week back or so, we rallied later on, but then turned back to the downside. So it looks like that this range is going to continue, and normally when you see the range, can be even a running triangle here. So for wave B, we are still missing this wave E rally, but eventually I will be looking then for a new sell-off, probably already next week. Okay, so watch out for more weakness. If suddenly, let's say, we broke 127.50, then I think 128 is still going to be a very strong resistance. So we either are going to see triangle here for a wave B that will send prices lower, or potentially something much more complex but still bearish for the pound, I assume. So dollar should continue higher versus pound here and break these levels. Also looking at the Aussie, so we have the RBI meeting, and I know that they are expected to keep rates unchanged. Also, as you know, China has a very strong impact on the Aussie, and the economy in China cannot pick up. However, they're making everything possible to turn things around. But for now, Aussie is not gaining any kind of a bullish momentum here. You can clearly see the downtrend is in the cards, and I assume that we will see another leg to the downside, because the recent bounce here cannot be counted in 5 waves, okay? So whenever you're looking at the uptrend and you see only 3 waves to the downside from a new highs, or a downtrend and you see 3 wave rise from a new low, then this should be seen as a temporary pauses within higher degree sequences, okay? Because any kind of structures in 3 waves, okay, are corrections. It's a different story if you would see a 5-wave rise from that lows. But because that was only a 3-wave rise, I think that that's an ABC rally and that we will see more weakness. So next week, I would not be surprised if this weakness will resume, especially when this channel is broken. I would be looking for 630 to be retested, okay? But then I would start observing potential reversals, because after all, I'm expecting 5-wave down. So this 5-wave down can be the final leg of this trend that I'm tracking from start of July, okay? So for now, definitely Aussie remains on the bearish track, and as I said, dollar Chinese yuan, it's very important. Looking at this trend is still ongoing recovery, and looks like that we could be headed here back towards this October 2022 highs. So I would be looking for this level to be retested before I may consider a changing trend. In fact, we have a very nice potentially ongoing 5-wave rise, so maybe final piece of the puzzle to complete this recovery is still missing. So watch out for this level. So if dollar Chinese yuan will really see this level here, then we know that Aussie will most likely stay under pressure, at least for this period. Now let's take a look also on dollar CAD. Bank of Canada, as you know, may stay sidelined despite inflation being above target. So we will see how this will unfold, but for now, trend definitely remains in the favor of the US dollar. Looking at dollar CAD chart, we have a very nice ongoing impulsive recovery here on the intraday sequence, and 5th wave up here could be in progress after recent bounce from the support after CAT and US jobs data. So I think that there can be more intraday strength here. Watch out for this resistance to being tested next week. Also, that's definitely a very healthy recovery because back here in July we turned higher back into this uptrend after retesting this trendline support. So that's still an uptrend, and at least in the short term I think that this pair is in the bullish mode. Okay, even I'm expecting straight move to the upside as long as we are holding this level. So if you're looking for dollar CAD, then you know where is the risk. Okay, so if we break 3490, then obviously things will change. Now let's take a look on dollar yen. So dollar yen obviously moved to the upside because the US yields finished the week Friday higher. So watching here this the intraday structure, we were seeing a very nice pullback actually, and we've been looking for this to be a wave 4 with members. I was looking only for a temporary pullback because if you look at the whole structure here from July 14, it's still incomplete. Okay, because that was a pretty impressive recovery, and because that was an extension here up from 138, I think that was the third wave. And normally when the third wave is extended, it can belong to the higher degree 5-wave cycle, because between these 5 waves, okay, normally the one in the middle, the third wave, will be extended. So because this was the extended lag, I was assuming that more upside will occur after a pullback. So that was so far a very nice pullback. Notice that we stabilized here at the previous swing lows and also this very important swing high. So because we rallied here into the Friday close, I think that more upside is in the cards. Okay, out of this wave 4 into a new high for a wave 5. So watch out 148, maybe that's the upward projection. But once we see these new highs, keep in mind it will be the final leg of this 5-wave recovery. Okay, so after that I will be looking for a major reversal. Looking at here at the daily chart, we are definitely testing very important fib level here, but still the intraday structure shows incomplete pattern. So that's why I'm looking maybe for a final push higher, but then watching will be expecting a major reversal. But major change in trend won't happen, at least as long as we are trading above the trend line. Okay, this trend line clearly has to be broken, let's say around 142, before we can say that trend has changed here. It will have to do a lot with the US yields. You definitely need to see a completed recovery on the US yields before this dollar weakness may resume. Okay, so in the short term, as I said, more upside is possible on the dollar yen, also dollar index, and as I just discussed on other currency pairs, I think the dollar has some room left for a recovery, and this also comes from the US yields. You can see that I am observing, okay, I'm tracking a recovery after we completed and bottomed here after this ABC drop in April. So from there I'm tracking a 5-wave movement. And notice that this recent pullback occurred after just a minor spike to a new high. Normally when this happens, okay, I will not say that the major trend has stopped out here. Normally these spikes are just temporary. So if I'm tracking the higher degree 5-wave recovery, I definitely want to see something more stronger and higher here in this trend. So I would be looking for higher prices here after this pullback. Let me just delete this. So after this pullback, which I believe can be wave 4, I'm looking for another push to the upside, and that's when also sentiment could move into some of the extremes here, because US yields will be pushed even higher. That's maybe majority will still turn back towards the hawkish views, and that's when sentiment will move into the extreme, and that's when I would be looking for a completion of this 5-wave rise, because that's unfortunately this how it works with the sentiment when looking at the Elliott Wave cycles. So I will be looking for a final push higher here, and then eventually will expecting a top later this year. Okay, but so for now it's still an uptrend, but if we suddenly, let's say, break this trend line, this black one, then obviously I may consider after all that we are topping out. But for now, looking for a final push higher here into the wave 5, and at the same time dollar index could rally further towards 105, 106 resistance area, but then both could turn to the downside later this year. Also, let's take a look on dollar Mexican peso. Now if you're looking for some kind of opportunities on the short side of the US dollar, then watch this pair. It's been pretty strong downward trend here, so I think that this is still very valid bear market, which could resume after a free wave rally. So whenever we will see a free wave recovery, watch out for more weakness on this pair, okay? Because Mexican peso has been pretty strong over the last 2 years or so. So I'm definitely will be looking for this trend to resume after a corrective movement. Now, correction, in my opinion, is now underway. Notice that I'm observing wave 4 here. So very nice resistance, still hasn't been really tested at 17.50. That's the level I would watch for. Okay, so watch this level for a potential new reversal to the downside. So even Mexican peso for now looks weak when we are looking at some intraday cycles here. I am expecting more strength for the recovery here, at least in the near term, before this correction can be finished. Okay. Now let's take a look on crude oil. Now we've been looking higher on crude oil. We identified this correction here in August as temporary one in ABC lags. We bottomed perfectly at the 38.2% of this extended wave 3. So normally that's the fib level that you should watch for whenever you're trying to project the end of a wave 4. Okay. Afterwards, we broke this trend line. So move out of this corrective channel actually caused very strong recovery here, which in my opinion could continue even higher because it's a really strong move and an extended price action. And even wave 5 should be made by 5 waves. And if you look closely here, we have one strong leg in the middle, right? So this, I believe, is wave 3. And if that was wave 3, then this was wave 2. So more upside should come after this pullback. So I'm not sure from where the pullback will occur, but if suddenly, let's say, we drop back towards 84, this will be the next support because it was the previous swing high. So for this trend to stay up here, you definitely want to see that the previous highs will hold, okay? Because if we are making a new trend here, then these previous highs should hold as a support. If not, then this current breakout will be seen as failure and temporary. Now let's take a look on the S&P 500 as well. So firstly, daily chart, we have a pretty nice ongoing recovery. We are just now slowing down here for a correction because the dollar is in pullback mode. Market participants want to see what the Fed will do. So as long as we have this indecision if the Fed is really going to hike further or maybe stop the hikes, that's how long we will stay in the range, okay? But still in uptrend here on stocks when looking at this trend, because we are after all above this 2022 trendline support. So I will be observing this wave 4 that is now in play. Either can be a little bit deeper with another swing low coming, or could be even some kind of a triangle. So the key will be the US yields and the US dollar, obviously. If the US yields will show us signs of a top and we see US dollar coming to the downside, that's when this stock market could recover much further and easily. Keep in mind that the US dollar dollar index has seen a pretty strong recovery, let's say, over the last few weeks. But stocks are also doing quite well. We have seen a very nice rebound. So whenever dollar will hit resistance, I think that's when stocks could easily fly to new highs. Okay, so for now we are still observing this corrective price action. As I said, wave 4 could be a little bit more complex. I'm not really convinced. If it finished here, I would definitely have to watch these current levels that market is testing here. We are at the 61 and 78.6%. It's a little bit higher. Keep in mind that we have only 3 wave rise here. So definitely some resistance could be in the cards. Also, as I said, Monday, It's the US holiday, so obviously market could stay sideways here for the start of the week and even make some pullback lower. Keep in mind that we have this intraday 5-wave cycle that moved into this recent FIP resistance. So if that was the 5-wave movement, and at least if we try to focus just on the short-term swings, well, if the drop would be only in 3 waves, it should be even deeper, because that's still only the first leg of this corrective price action. So watch out for further weakness here, at least at the start of the week. Okay, and now finally, last market, let's take a look on gold. On gold, firstly, big picture here. Notice that the gold is in recovery mode and doing quite well despite higher interest rates. Okay, so whenever the interest rates are going to slow down or maybe even reversed in 2024, that's when I think that gold will explode even higher. Because if gold can stay at these current levels despite higher US yields, I think it will be much easier for gold to break to new highs whenever rates will slow down. Okay, so I'm expecting that we will see further gains here when looking at the big cycles here for the for wave 5 on gold. But on the short term, I'm not really convinced that we completed the corrective drop here down from May. Yes, it was a very nice 5-wave cycle, but now this 5-wave cycle should be then reversed by 3 waves. I think that this current range price action can be a wave B, so very strong support could be found later this year around 1800. Okay, it's the 61.8% and also the former wave 4. So that would be a very strong level, a very nice level, at least for me to look for resumption higher. Okay, and completion of this pullback. So watching these levels very carefully if we are going to see a retest of these levels, and whenever US yields maybe at the same time will show us that 5th wave up that I showed on the earlier charts with the US yields, that's when things could become very, very interesting and attractive for metals. Traders, thank you very much for your attention. I hope that you enjoyed this video and good luck next week. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.